Is it the end of the bear market rally, or is the bull market just resting? That's coming up on 3 Minutes on Markets and Money. In this past weekend's bull bear report on the website now at realinvestmentadvice.com, just click the newsletter link. We discussed the market sell-off on Friday. As we have been talking about over the last couple of weeks, the markets were very extended above the 50-day moving average, had run into the 200-day moving average as resistance, and we've had a very strong rally here over the last 9 weeks. Now, this rally aligns very much with historical rallies in the past in terms of bear market rallies, right? We had a rally that went about 63 days, about 17%. That's very much kind of a textbook bear market rally in terms of percentage gains. 5 stocks comprised 30% of these gains. Of course, those are the big 5 stocks in the S&P 500, Apple, Microsoft, Tesla. Those comprise 86% of the game came from U.S. stocks versus international. So again, a very concentrated rally here. So it was a narrow rally that gave us a nice lift here, but ran into resistance. And we talked about that extension, deviation, and resistance was likely going to lead to a sell-off in the markets. And the one thing we were really watching for is a sell signal in our MACD indicator. That's that moving average convergence divergence, telling us that, well, we may have seen the run of stocks for the time being. Typically, when we get a sell signal in the MACD, that is pretty much aligned with previous kind of peaks in the market. So again, this is a very important indicator that suggests that we could see a little bit of selling pressure in the markets near term. We also have a sell signal in our money flow indicator, and markets are very overbought and starting to turn lower. So again, a lot of indicators here suggesting we could see some follow-through downside pressure this morning. Futures are pointing lower, suggesting we're going to get a bit more of a pullback here. Initial test is going to be the 20-day moving average. And that's going to give us our first level of support test here. Just below this is the 100-day moving average. So again, we might get a little bit more support there. The 50-day is kind of that line in the sand right now for the markets. A break below that, we're going to retest recent lows, potentially even set new lows. And of course, then everybody will be saying, yeah, that was a bear market rally. So we'll see when we get there. But we kind of go through these support and resistance levels in the newsletter. So again, go by the website, realinvestmentadvice.com, click on the newsletter link at the top. The first chart in the bull bear report this weekend kind of goes and lays out a Fibonacci retracement of the recent rally. Pretty much everything aligns right around 4,000 on the S&P as kind of critical support. So if we get a pullback to 4,000, the markets hold there, and we get to an oversold condition in the MACD indicators and in our other indicators as well. If those get oversold, holding support at 4,000, we can look to add exposure to portfolios. We're going to have to wait to see what it's like when we get there. But again, we've got a lot of things coming up here over the next few weeks. Jackson Hole at the end of the month, the next Fed meeting in September. Economic data likely continue to struggle here. Watching employment, that'll tell us a lot about what's going on in the economy. So again, this all is going to translate back into earnings, inflation as well. And we're starting to see those earnings estimates come down. So again, stocks are going to have to start pricing in weaker earnings estimates. That does give us some downside risk here temporarily. So we'll watch this closely, keep you up to date technically. And that's 3 Minutes on Markets and Money today.